Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the week of the CPI and the PPI and banks earnings. I know a lot of things happened this week, but we started the week with no data on Monday. A lot of Fed speakers saying that the effort has to keep pushing from the Fed to continue lowering interest rates, most probably. Then on Tuesday, we have more Fed talking. On Wednesday, we saw that on the FOMC minutes, everyone was pretty much aligned with the 50 basis points, but were some of them maybe voting for a 25. So it's not that everyone was on board of the 50 basis points. Some of them were thinking about the 25 maybe will send better signal of slowly and smoother lower interest rates. But at the end of the day, they vote everyone minus one Fed on the 50 basis points, and that's what we got, and that sparked a big push on the markets. Finally, Thursday, Friday were inflation days. We got the CPI on Thursday. In terms of headline inflation, we got 0.2, higher than expected. We got 2.4, higher than expected. And in terms of core, we got 0.3, higher than expected, and 3.3, higher than expected. And I think this is not good. Market was quite shocked to know this. But at the end of the day, there are some people that are still thinking that these are decent values to continue until PCE comes out later in the month. I don't think these numbers are good, so I will just say that. I think all four of them were a miss, a big miss from Wall Street. And also initial jobless claims came in way higher than expected, 258 versus 30. So when you have inflation going up and you have the labor market going down because your claims are higher, it's not a good thing. It's, it's a sign of be careful, be really careful. Finally, on Friday, we got the PPI. PPI month over month came at zero, better than expected. That was 0.1, and the core PPI was basically flat as expected. Well, not flat, but as expected, less than 0.3 and less than 0.2 in the month over month. Consumer sentiment went a little bit lower to 68.9. We were expecting to hold at 70. So it's a mix of bad data from CPI and decent data from the PPI. And I think what really helped the market to to see that maybe the numbers were not so bad is shelter went from 0.5 to 0.2. We got services, the entire services less energy services were flat at 0.4. There's a lot of commodities that are going negative from the energy sector in terms of food at home and things like that. It's a big spike, so it's counterproductive. So it's a mix, but at least services and shelter are going down. Maybe that was the reason why we saw a move into a 25 basis points, a massive move. We have now almost 80% of probability, and look at the pace. This is the pace that I want to see. 25 basis points all the way down through the mid of 2025, and then a big pause to see if we can continue lower or what. And we will still see 325 in 2025. We are way above the 2% target. And that's something that long term will affect the economy, not the markets. Let me tell you. Another thing that I think sparked optimism was that Friday we got JPMorgan, Wells Fargo, and BlackRock earnings. Let me tell you, they are still crashing the earnings. JPMorgan popped 5% on better than expected interest income and also earnings per share EPS 437 versus 401. Revenue skyrocketing more than 2 billion from the estimate. And basically it's fixed income trading 4.1 billion instead of the 438 billion. Equity jumped 27%. Is huge, huge. And I think they are more than enough to literally raise, because they are the biggest bank in America. They are a staple of sentiment. And when these and also Wells Fargo jump also 5% on beating expectations, as you can see, EPS beating expectations, revenue a little bit of a miss, but the the shares were on JP Morgan, shares were just 4.44%. And on Wells Fargo, we got 5.61. BlackRock was also 3%. The entire banks, as you can see on the right hand side, were all, sorry about that, were all in the green. JP Morgan 4%, Wells Fargo 5%, BlackRock 3.63, Citigroup 3.56, the entire Kyrie regional sector. I mean, look at XLF. XLF, it was 2% on the day, and you know what is happening, right? Breakout, big breakout. And this is pushing the economy. This is telling all the economists, all the other markets, that financially, US is in a pretty good spot. But here we are trading the Nasdaq, right? So we have to really analyze how it's handling all these things. The first thing that I would like to say is that Tesla dropped 8% on the poor presentation of the robotaxi and the lack of details on that really was making the price action in the Nasdaq really choppy. So on the week, we have, this is the week we started in the red, then ahead of CPI we tried to push higher, but we were not able to really push this pivot up here. So we ended up in a very range week, end of the week. We go to the 1 hour, as you can see, look at this. This is just a 1 hour chart that is telling you we are in range, waiting to see where are we going. Are we going up to really this pivot taken out, or are we going to start down and trap all? My guess is that the same that we did with these discount weeks, all these I think expected. We have this week, this discount week at 19,900 right here. Then we jump and we held pretty much the same kind of. We are in a 1 hour fair value gap with a 1 hour week discount week that we've been holding 1, 2, 3, and 4 times. And also an order block on the 15-minute, after that order block that is holding, and it's pretty much range, but it's holding. It's a holding pattern, the same that we got down there and then we moved. I think next week we are going to try to go through all these because you can see a lot of orange, a lot of red, a lot of resistance in my charts. It's the weekly inverse and the daily inverse and the weekly inverse are still here. Let me just show you in the context of that chart because we are still pretty much in the middle of the resistance. It looks bullish because we rejected, but then we are now entering again. That's the weekly. And on the daily, we have also a big range here. We rejected and we are entering again, knocking the door. And most probably we are going to continue pushing higher. That doesn't mean that our push is going to be neat, is going to be efficient. And that's the thing that I'm lacking the most. This kind of range in the 1 hour in lower time frames, it's a pain in the ass to trade. As you can see, this is super difficult to trade. We have to wait for the extremes for that manipulation to happen, and it is what it is. They are taking liquidity both sides, and you don't know until it happens. We are right now trapped between a 15-minute inverse up here and the 1 hour is fair value gap down here. And if we see the range, this is the range. We are right in the middle, in the midpoint. So what do we have to do? We have to wait. We have to wait. If you pick a side right now in the middle of the range in this high time frame, you are just gambling. You have to wait for a clear signal that we break one side and we have some kind of structure that continues higher. Be careful with the Wyckoff manipulation that may happen in this case to the long side that I'm expecting. I'm expecting upside, so I don't want to see this kind of manipulation going higher. Be really careful when and how you jump into the breakout because we are going to see that. Most probably, this is, let me just move it, people that I'm interested for next week, right there. We can clear this. So I think that's all. I think for in terms of charting, we have here a big 15-minute. Big 15-minute. We have a 15-minute bullish fair value gap that if it holds, it might be really good. It's holding after the big push after PPI, and we got pre-market low, and we started chopping. And at the end of the day, we got this kind of rejection for the 15-minute, and we are in the middle. So I mean, you can see it is not clear when we have these match fair value gaps that all of these fair value gaps are not random. I like all these fair value gaps for one reason. And when you have so much of them, it's just uncertain. Some a few of them will not matter at some point, but you don't know yet where are we going. I'm going to extend this to open on Monday and really see what happens. I think how we start the week next week is going to gauge, is going to trigger how the sentiment is going to be the entire week. So I will be patient, wait for that kind of Monday to show me how are we going to play the rest of the week. For the rest of the markets, I mean, it's not too big. Dollar is just there. The Russell spiked really hard, 2%, but we are still below, we are still coiling. And the RSP it's continuing higher. I like how the breath is acting. You can see, we can see that all three distributions of trend are pushing on momentum. All caps are pushing. They are quite good. Breath. You know that Russell is pushing. Financials are good. And the ES broke out. The ES broke out. So we are at 5,800. And this is pretty good for the sentiment. The ES again and again and again, it's really pushing the sentiment higher because obviously the S&P and the breadth are correlated. The S&P 500 has a lot of companies that are in good mood for lower interest rates, so it's pushing. As the here new all-time highs at 5,868, and so the ES is pretty good, and the SPX cash, it's the first time that we have it above 5,800 SPX. So the Nasdaq is the laggard. We know that the Nasdaq is trapped in here due to Tesla, due to how hot the AI stocks were. Nasdaq being the laggard it's not good for us that we trade the Nasdaq. But I think the overall market, it's in a pretty good spot to continue. I can see the Nasdaq pushing higher, being dragged up by the S&P, by the Russell, by the small companies, by the financial sector, XLF, that is crashing. Look at this. It's beautiful. So if you have doubts, if the economy is in a strong spot, you should not have those doubts. I don't have any doubt that the US economy is strong. But the Nasdaq is somehow lagging behind and having really choppy price action. And that's the tricky spot. Maybe for you, it's better to trade the ES instead of the Nasdaq. I will continue with the NQ. I've been trading the AQ for almost 6 years. And I think it's what I like. It's what I love. It's where I can have the most gains in my setups. So, but understanding how other markets are behaving, how the ES breaking out and holding above 5,800, how the breadth is improving, how the XLF and financial sector, due to good banks earnings, are exploding to the upside with a good breakout of all-time highs. I mean, it is what it is. That market, those markets are really strong, and I can see more upside in the NQ. Not efficient for now, but that's what I'm going to look for next week for more longs. As we are in the middle of the range, I will have to wait and see where are we going. Have these three ranges. Wait and see again. That's all from my side. As always, thank you for your time. If you found these weekly recaps useful, please give them a like, give it a like, subscribe to the channel. I upload these weekly recaps every Saturday for you to understand how to summarize. I summarize the entire week in the fundamental way, in the technical way, and I prepare you for what is coming. And my approach to these markets right now, I don't have a real clear forecast. Because we are in the range, but I also have Monday through Friday daily videos for market forecast, market updates, and market recaps. So join this channel, join me in this journey of trading. You will help, you will learn a lot, and you will help me grow. So if you want to support and you like how I see the markets and my setups, you are welcome. Remember that discipline, patience, and risk management are key for your success. Stay safe, everyone. Have a nice weekend, and see you on Monday.